evening, everyone, or late afternoon, I should say. It is a real pleasure to be here, and as you know from the introductions, we have two sufficient stars here on the stage who are pleased to be talking to you, and this is the first time that Money20 has been here in Europe, so a very exciting moment. And Sebastian, you have to give them something to talk about because I hear a lot of news generates out of Vegas, so we want to give Vegas a run for its money.
Okay.
And Sir Michael, a real pleasure.
All the news comes from Stockholm these days.
Exactly right, almost in your backyard, I should say. Sir Michael, pleasure to have you here as well.
Yeah.
VC stars, we would say, and a lot of people looking to see not just why you invested in Klarna, but what you're looking at today as well. But first, since we are here talking about the payment space, there is no shortage of payment companies here at Money20, which is rather appropriate given the extent of funds, the investment that continues to go into payments as a percentage of all fintech investment. So Sir Michael, if you could perhaps get us going here by explaining exactly why you invested in Klarna when you did.
Well, we didn't have an investment in any financial service company that began with a K. And that's late in the afternoon, obviously. All right. Sebastian and his co-founders built, starting in Sweden and then in the Nordics, a very distinctive company that, were it in the US, would have a much higher profile than it does outside of Europe. But it's distinctive in the following fashion. It has been around for more than a decade. It is growing at a very healthy rate. It has been profitable for a whole bunch of years. It provides credit to millions of consumers who are very satisfied and content throughout the Nordics and increasingly throughout Greater Europe, in Germany and in France, and is now expanding its business into the UK and the US. All this from a company that didn't exist when Sebastian and his co-founders came up with the idea a bunch of years ago. And it's clearly one of the top 3 or 4 companies in Europe today.
And Sebastian, if you can just tell us whether or not that resonates with how you feel, and also maybe explain a bit more detail of exactly what Klarna does, what differentiates it from some of your competitors, for those in the audience who might not be aware.
So I was very happy to hear about the K thing. That was news to me. No, but a part of that, yeah, I think it was a very good description. And I'm happy that Michael, our board member, is so well into all the details, as he's always been. But doing very well here in Europe, and very excited about our startup in the UK and the US. So.
But part of your success is, in fact, you can become a victim of your own success, and competitors start taking notice. We've already seen some of the incumbents, if you will, try to copy your model, which is just to get quicker conversion, really, for the retailers. How concerned are you by the increasing competition, and how will you continue to set yourself apart?
Well, I mean, for example, it's funny now, if you look at like payments companies out there, everyone is talking about simplicity, safety. I don't know how much we've heard about that. It's ironic that, in 2007, 2008, I love Visa and MasterCard, by the way, in many ways, but they launched something called Verified by Visa and Secure MasterCard. And in the UK, it meant that if you bought online, you had to enter the 3rd and 5th character of your password or whatever. It was totally impossible to use. And like at that time, that was great help for Klarna. That was the best year of Klarna. We grew so much thanks to Visa and MasterCard. Thank you guys for making it really hard back then to shop online. Now, obviously, they have like woken up, as have many other payments companies, and realized that simplicity is really core, right? But simplicity is the problem we solve today. To me, it's already solved. There are a number of solutions out there competing, et cetera, but like Klarna has one solution, other has others. What's really exciting to me is what's the next problem, right? And that's the one we're trying to solve today already, developing for building products and services for what is the next big thing going to be. And I don't think it's simplicity. And none of us believes that 5 years from now we're sitting there when we go online and shop something and entering like credit card details manually. It just doesn't make sense.
Then what is the next big problem as you see it?
Well, I can't tell you.
Okay, we'll have to wait for the conference next year. So, Michael, when you look at the competition, you were a very early investor in the payment space. PayPal, you invested in the 90s. How does this sector differ from when you made that first investment?
Well, the underlying technology has changed the possibilities for all the companies that have started in the last few years, or started before that, but then have embraced mobile technology, because PayPal started in, I forget, it was either 1998 or 1999. And nobody was doing commerce on their Nokia 2600 or whatever, whatever little jelly baby we were carrying around at that point. And that, in the last 48 months, as everyone in this room is very aware of, has transformed everything and has massively expanded the size of the opportunity. And the other thing is, just look at the growth of e-commerce in the last 15 years. Look at the size of Amazon in 1999 and Amazon in 2016. So the opportunity for companies like Klarna mirrors that sort of growth. And our assumption is that, you know, without being romantically absurd about it, is that that will accelerate in the next 3 to 5 years. So that's the big change.
So the opportunities are increasing, but there are so many players, and increasingly so. And you mentioned smartphones obviously giving rise to these trends, but the smartphone makers are involved, Samsung, Apple. So what is the end game here? I mean, if you were to look at the field, how many of these players do you think will survive, or will we see consolidation perhaps?
It's like any new emerging industry sector. There's always a tremendous amount of enthusiasm. There are always plenty, as you just alluded to, Nancy, of companies that get financed. Then gloom and despondency inevitably sets in. And a lot of the small fry who haven't got the proposition right or have decided to go straight after consumers, which is pretty much always a suicide mission, or done something else silly, they haven't attended right to the regulators or other constituencies that they need to take care of, will fail, and despondency will set in, and everybody at that point will underestimate and be too despondent about the future opportunity for companies like Klarna and others. There'll be a short list of companies that become very, very significant.
What do you mean by suicide mission, going directly after the consumer? What are some examples of that?
In payments, I think, unless you're a very large company, very large, I think it's very difficult to, and Sebastian knows much more about this than I do, to me, it always seems extremely difficult to go with a new product and try to persuade a consumer to trust your service as a payment mechanism if they don't know anything about you. It is far more prudent to go and convince merchants who already have lots of consumers that you can do a fantastic job for the merchants, like Klarna, and help them make their business better.
So Sebastian, that raises the question of how are you convincing the merchants then, especially when you get into new markets like the United States, where you may not have the name recognition that you have in Northern Europe?
Sure. Well, I think, I mean, in the end, it's just, for us, it's mostly about, like, you know, can we actually prove that we increase sales? If we can, the merchants want to talk to us. If we cannot prove it, it doesn't work, right? But I think, again, like, it's a lot of this is just, what I really like about what Michael says and where I think we're aligned is that, like, there's so much trends going on, there's so much buzz, really, right? So the question is, like, how do you avoid the buzz? It's funny, like, I don't think people even remember, but, like, 99, 2000 was the year of the wallet. You know, 2005, Dell announced that you were going to get a credit card reader directly in your keyboard, so you could swipe your card, so you didn't have to expose your credit card number online. And, you know, media went all about, and, like, Dell is going to take over payments online. I think, you know, how do you distinguish what's really, what really changes? And one thing that I believe in is, like, you don't bet on technology, right? You got to avoid betting on technologies, because technologies are just solutions. What really can shift is user behavior and how do you adopt that. Cross-border is a very interesting thing that's happening right now, right? People are really shopping more and more cross-border than they used to do. And I think so, for us, like, it's creating solutions that help merchants tap into those new shifts. Mobile was I mean, nowadays, mobile is, like, totally given, right? But, like, 3-4 years ago, when we developed that solution, people were still asking why. 2 years ago, we had 17% of our volume on mobile devices. Today, we have 70% of our volume on mobile devices, right? So, like, the fact that we can actually convert mobile users into payers, and not only desktop users, that makes a big difference when we when we try to convince merchants. But I also think a lot of the future innovation is going to be around the consumer offering, because I don't think really as much has happened there as has on the merchant side.
And presumably the merchants are also very concerned with price as well. So with more players in this space, do you feel like you're constantly having to reevaluate your pricing model and slashing prices?
That's always going to happen, I mean, to some degree, right? But currently there's there's been so much innovation, and if you can increase a company's sales by 15-20%, I tell you that the pricing discussion is not your biggest challenge, really.
Michael, do you agree when you look at the valuations for some of these payment companies? Do you think investors are accurately taking into account margin pressures?
Oh, investors are always wrong. Always. They're either too optimistic or too pessimistic. And so I don't know. And I'm not dodging the question. There's no easy answer because it's going to vary by company. You'll find some companies, when we look at the names 5 years from now and review the history, that'll seem ridiculously priced, and others that'll seem quite cheap.
You say that investors are always wrong. You've had a lot of good bets in your time, but you have invested in several payments companies. You've been in Square, you've been in Stripe. Is this a way to hedge your bets, or do you think each of these companies has its own value for its own sake?
We try not to invest in companies that compete with one another. And at the beginning, usually, well, almost always, we're able to achieve that goal. Sometimes as the companies grow and their ambitions and orbits expand, there's some overlap. But you mentioned 3 companies. You mentioned Klarna, Stripe, and Square. They're all very different companies. And to some extent, there's collaboration. I mean, there's collaboration between Klarna and Stripe, but Klarna's mission is different from the Stripe mission, and is different from Square's.
Is that how you see it, Sebastian?
Oh, absolutely. I mean, it's really not like, to me, us versus somebody like Stripe or Square or whatever. I mean, the great thing about payments and is just the size of the market, right? I mean, you can be successful in this. If we would get 1% market share in the US, we would probably triple in size as a company, right? So like, it's just the size of the market, and it's really against all the big guys.
What all these smaller companies are competing against is deeply ingrained habits. That's the big competition.
Sure.
It's not the other smaller companies.
You just mentioned the US. What exactly are your ambitions? Because we know previously you set out some very lofty goals in terms of increasing revenue in the US. Can you walk us through those numbers in a bit more detail, and what exactly is the strategy there?
Detail, I'm not sure I can, but I can tell you that it's been extremely successful for us.
And you just launched in what, September?
Yeah, we launched in September, and we actually had more than 10% of our volume in the US last month. So I think that's kind of, that was a surprise to us of how quickly we've been able to master that. But I mean, again, it's like, it still takes time. We need to talk to merchants and get them on board and all that. But if you compare to the launch in countries like Sweden or Germany that we did previously, it's just going much faster than any other market we ever seen before. So that's very promising.
Because of course scale is the other big issue we talk about all the time when it comes to not just payment companies, but a lot of fintech companies really being able to be successful if they can scale. Do you feel like that is the biggest thing you run up against when it comes to competitors looking to get in this game like Amazon, who have natural scale based on their client base?
I actually find the hardest thing is to find great, talented people that want to work for Klarna and join us in building this company. So if you're interested, feel free to email me. No, but honestly, like, I feel like, yes, competition is important, and you do watch it and you kind of what's happening. But clearly the challenge is the everyday company, and just like, you know, there's so much opportunity out there. It's not lack of opportunity. It's like being focused, deciding what to do, and then execute really well on it.
One additional point there, Nancy, and I say this without trying to sound like an advertisement for Klarna or be vainglorious or engage in chest thumping. But for a US payments company to come into the markets that in Europe where Klarna has really succeeded is a very difficult thing for them to do. Klarna is hard to compete against. in the markets where it's deeply entrenched.
Why is that? Just simply down to the first mover advantage, or is there a regulatory barrier there as well?
Sebastian.
Well, I think, I don't know if it's the first mover, but I think we've been able to build a very successful, well-working product that's very appreciated by both merchants and consumers. So, you know.
And it's a lot of hard work done extremely consistently for a very long time in the face of all sorts of skeptics and critics who never thought that a little payments company in Sweden stood a chance. And it's ferocious determination plus delivering on the promise that's enabled Sebastian to get Klarna to where it is today.
And I mean, just to add to that, I mean, to us, like, I can still remember when I was, when we were looking for an investor 5 years ago, and I was like watching Google Street View, and I was like looking, how does Sand Hill Road look? Like the place where the office of Sequoia is, and it was like this legendary investor, right? And then we got them on board, and it's just been amazing what kind of support we've gotten. Like, I think it's really sets Sequoia apart to some degree from other investors.
How did you get Michael on board then? 'Cause that may be of
So,
interest to viewers.
yeah, so actually there was a company in Sweden that had a Sequoia investment, and I met with the CEO, and I asked him, like, do you think Sequoia would be interested? And he said, never ever is that going to happen. And that was kind of the end of the discussion. But then fortunately, back then Sequoia and Michael was working with a guy called Chris that was like calling every freaking guy he could find in Europe and saying, hey, do you have any interesting companies? And so he called the CEO and he said, you know what, there's this company called Klarna. And then we met in London, and that's kind of the start of it. So.
And what changed your mind from that initial?
No, we were always interested in a company that has the prospect of becoming a leading, you know, one of the leading companies in a particular sector. And Klarna, back when we invested, it was beyond the pure startup stage, but they'd done so well in Sweden and to a lesser extent in Norway, Denmark, Finland. But it wasn't in Germany yet, it wasn't in France. Business was much, much smaller than it is today.
Where are you looking now in Europe, if I can just ask?
Oh, we're happy. We have we have a handful of investments in Europe. There's Klarna, there's a company in London in the networking business called MetaSwitch. There's a very popular travel search company in Edinburgh called Skyscanner. But it's a fairly short list. And if we can find other companies like all of those companies 5-7 years ago that offer the prospect of being market leaders, we don't mind where they are in Europe, just so long as the founders have that sort of drive and ambition.
And are there any specific sectors that you think are perhaps
No,
underinvested in?
No, I've learned over the years not to be specific about sectors. You look for opportunities as they present themselves, obviously in areas that you're familiar with. You don't want to go into totally uncharted territory a long way from home.
And Sebastian, taking a closer look at your expansion plans, your future plans, you've touched on a lot about your expansion in the United States. Where else globally are you looking to expand? I know you've had a bit of a launch in the UK as well. Is that an area you expect to continue in?
Yeah, I think for us, I mean, we have a banking license today, so reusing it in the rest of Europe makes a lot of sense for us, right? Because you can passport it according to regulation. And then potentially somewhere outside of the Europe as well, or a couple of places outside of Europe. But again, I think, I mean, to us, there's, to Michael's points, there's a lot of like, you know, trends and this and that happens. Like if I would read TechCrunch and, you know, then I would change the business strategy each month, right? Because either it's social or this or that. Like to us, like we have a long-term vision, what we want to achieve. Part of that is being global because it makes sense as retailers are global or are becoming global. E-commerce is pushing that trend very, very hardly. So like we need to be there for them, for those are our partners. And so that to me is just a question of time. I don't know whether it's happened in 1 year, 2 years, or 5 years, right? But it will happen.
And tech companies often look to China, of course, just given the sheer size of the market. But do you feel like that could ever be a market for you, given
No.
just the stronghold?
I would never go to China because
Why is
Alipay is one of the most impressive companies I've ever met. They're just amazing. They're so impressive, they're so smart, they're so dedicated and so hardworking that there's nothing to do in China, forget it. There are other markets in Asia like Japan or other, which I think there's more opportunity for Klarna and other companies alike, but forget it, Alipay is the thing.
And do you think that's an opinion shared by your peers, by your rivals, if you will? They don't even want to dent the Alipay armor there.
If they don't share that opinion, I disagree with them, so it's fairly easy.
And Michael, do you think that's a valid view to have on the payment space for China?
From an American or European perspective, yes. Probably not entirely if you're a Chinese company.
Sure.
I think if you're a Chinese company, there are substantial market opportunities, despite the presence of Ant Financial and everything that Sebastian just said about the wonders of the way in which Alipay is executed.
So perhaps not payments, but other areas within
No,
fintech.
in payments and financial services.
But would you be looking into opportunities in financial services outside of payments within China?
For sure. Absolutely, yeah.
But I think worth mentioning is also that in general, this is very typical if you look at industrial history, right? There's a lot of conglomerates out there right now. They're trying to do everything. The big companies are trying to do everything. And just history has always shown that as the market matures, specialization increases, and it's just impossible to compete with the whole market. No one can do that. Even I question regularly myself when it comes to Klarna, are we doing too many things? Should we really do less? Because less is going to become more over time. And I think I'm very skeptical when I see large giants trying to pursue 55 different areas. How are you going to compete?
In China, there are tons of market segments. We happen to be an investor. You know, you'd never think about it, perhaps sitting in Copenhagen or elsewhere. Wealth management services. It's not what you read about in TechCrunch every day, but it's a massive market. There's a company there that we've been investors in for many years called Noah Financial, and it's building a very substantial business. But it's quite a long way from Alipay, and it's quite a long way from Klarna.
I do wonder, though, given that your company is so data-driven, so data-sensitive, do you think, even if you could get into the payment side in China, I know you're not interested, but maybe from your view, when tech companies have such a crucial element of their business being data-driven, do you think there's resistance from Beijing to let those companies in?
It depends a little. Oddly, I'm more of a Sinophile than most, and I think the Chinese government are interested in having American companies, despite what the Western press says. They're interested in having American companies succeed in China. It's good for the Chinese economy. It's good for Chinese consumers. What people in the West just aren't self-critical enough about the way in which the Western companies go to China. And the reason that most Western companies fail in China is because of their own doing. It's got nothing to do with the Chinese government or regulation. It's a whole series of Western imperial arrogance that brings about the downfall of many of these companies in China. I realize that's a minority viewpoint, but
I fully agree. And you wrote a piece about this, right? And I think it was published on LinkedIn as well. And I think it's so true. And that was totally my impression as well. I mean, they're killing it. They're super smart. They're super good. And I'm also very tired of hearing Chinese copy everything. Come on.
It is an extraordinarily innovative. The amount of deafness in the West and blindness and arrogance about the enormous success, innovation, drive, ambition, work ethic, determination to succeed, ambition to build really meaningful long-term companies in China. People in the West, on the whole, just don't get
I
it.
can give a great concrete example of that. We work with a company called Wish.com that is one of the fastest growing marketplaces in the world right now. And basically what they do is they allow consumers in Europe and US to shop directly from Chinese manufacturers, right? Currently, if you go into Wish.com, you're going to find cheap stuff without brands, right? And then it's going to be very easy if I'm a retailer to say, look, oh, it's only cheap stuff, it's the $1 store equal whatever. But that's just arrogance again. Like, if you don't realize that the Chinese manufacturers are going to wake up and say, look, why don't I put a brand on this and make a little bit nicer design and sell directly to these consumers? Of course they're going to do that, right? It's just a matter of time. And so you got to realize that if you're a retailer in Europe and your idea of business is to buy stuff in China cheaply, rebrand it, and then sell it here, and add 100% margin on that, you're going to be in trouble, right? If you, however, create something unique design, unique product or whatever, you're in a much better situation. You should probably think about selling that stuff to China instead.
Particularly if your entire country is really focused on educating young people in the sciences, computer science and mathematics and physics, and the really difficult topics, which is where the huge emphasis is in China. That sets you up very well for the next 50 years.
Certainly. So, Sebastian, just to conclude on the China point, if Alipay came to you and said, we want to use your technology, do some sort of partnership, that's something you would welcome?
Of course.
Just going back to what you said earlier about specialization, you think there is value in specializing in one product, not spreading yourself too thin, so to speak. Yet you have this amazing resources with the data you have of consumers on tap. We've seen some payment companies have other partnerships to kind of link up their data and provide that as another revenue stream. Also, this lending aspect of your company. Would any of those go on to provide separate revenue streams at some stage?
They might, but I think again, you have to decide where is the area that I want to be, that is makes sense, that is not too wide, and that I want to be where I want to go, and then make a full bet and go there. And you might fail as a CEO. You might make the wrong bet. That can happen, and that's part of the courage you have to have, I believe, sincerely. But I strongly disagree with people who try to do too many things. And I even battle internally, look, when we started 10 years ago, of course we had our own servers and all of that. I've pushed hard for us to outsource everything to Amazon Web Services. Why? Because Klarna is never going to compete and be building the best cloud. It doesn't make sense, right? If I would have started the company today, it would have been the obvious choice to go with one of those. Does it create challenges from a data privacy and regulated? Yes, of course, but these can be managed, right? So I constantly need to make sure that we focus on the right things and we put our energy in where we really can create the most value for our customers, whether it's merchants or consumers. And I strongly disagree with people trying to spread themselves too thinly and say, look, I have this data, now let's come up with 20 ideas on how to make money out of it. It's like, yes, but that's not the way to compete.
Michael, do you share those concerns when you look at companies to invest in?
Well, the most successful technology companies in the first 10 years of their existence will tend to do one thing incredibly well. And maybe there's 5 or 10% of other activity that hits the revenue. But certainly in the first 8 to 10 years, the great companies will do one thing.
Fair enough. We're already running out of time, so before we go, I do want to get your thoughts both on valuations at the moment and also exits, of course, a big topic on everyone's mind. Michael, from where you sit, are you expecting an uptick in exits, specifically for fintech, as we go on later into this year? Because the last big one we had, at least for the US, was Square, a company you were invested in.
We'll see. Again, and I'm sorry to be, I know you want a very crisp and clear answer. It's going to vary. It's going to vary by company, whether it's fintech or elsewhere. There's still a fair amount of for the very good companies, there's still a lot of capital in the private market. There's no reason, for example, for Uber to have to go public to access funds. They've got a lot of capital in the private market, so that they can pick their time. The companies that are going to feel the real squeeze are the ones with very threatened business models, and they're not going to be able to raise money privately or publicly. The good companies will have the opportunity to pick the time at which they feel that they need to be a public company in order to satisfy their sort of obligation to employees and other constituencies who've been with them for a very long time.
All right. And Sebastian, that of course comes to you. Are there IPO plans in the works? What would it take for you to list?
I don't really, it kind of feels scary to think about quarterly reports and all that stuff. And also very short-sighted, to be honest. Like, a lot of good products take 2-3 years to build. People tend to forget that, I think. So, maybe at some point in time it makes sense because you have enough shareholders, employers that have bought stock or whatever, that it's a natural evolution. But I'm not really in any haste to it. I mean, we're a profitable company. We've been profitable for 10 years. We're growing really well, and we can support the investments levels that we want to make ourselves. There's a lot to do and think about rather than focusing on IPOing.
If you were to IPO, or when it gets to that stage, if it does, would you be listing here in Europe or in the US?
I have no idea.
Right, we'll save that one.
You should
for
probably
the
ask somebody who knows. I mean, I'm so bad at stock markets. I don't follow them. I have no clue. And it just looks very confusing.
There's a very elegant stock market building here in Copenhagen.
Yeah?
I don't know if you've seen it.
Maybe we should choose that one because of the building.
They would be delighted.
Apparently it was built in the 17th century.
Oh, really? Let's do Copenhagen. We took the decision here and at
Your home
Money20.
country won't be happy with that one. And Michael, just before we go, what would you say from the investment standpoint the next big thing in fintech is?
I have no idea.
Are you buying the blockchain euphoria here? The hype?
No.
Why is that?
It's this question about what works in theory and what works in practice. And having something that works perfectly in theory but really doesn't solve a burning problem may be sort of an elegant exposition for mathematical textbooks, but it's not going to do much to help the consumer.
But it's funny now how people like, oh, it's not really Bitcoin, it's blockchain. And the thing is, like, I'm only 34, am I? 34. I already feel like the old guy sometimes because I'm like, hey, does anybody remember something called Second Life? And everybody was buying property in Second Life because it was this virtual world and like the property prices were rising and it was all over the media and like the Swedish ambassador was like opening the Swedish embassy in Second Life. And like, hello, has everybody forgotten about that? And 2 years later, Bitcoin comes along and I'm like, what's the difference really? Like, I'm just amazed sometimes how short our memory is.
All right, well,
maybe Second Life would have survived if Bitcoin had been its universal currency.
I'll tell you one thing. At one point in time, I made a statement that Klarna is evaluating if we would potentially offer Bitcoins. And it's never ever that we've gotten so much attention as that press release. That press release was like all over the world. I think we would never, so like from a PR perspective, it's the best thing.
But forget Bitcoin. They say it's all about the blockchain technology that banks will integrate. No?
What was the question?
People say forget Bitcoin. It's all about the blockchain technology that banks can integrate for their systems to reduce costs.
They're still busy putting in ATMs.
All right. Well, we'll leave it there. Thank you very much for your views, Sir Michael Moritz and Sebastian. Thank you.